Welcome back to Flint Creek Transport. My name is Justin. Today is another insurance video, except this video is going to be a little bit different than the last one. The last one we talked about traditional insurance. Today, this is about captive insurance. I'm here today with Jen. Jen.
Hi everybody, Jen Watson here. I'm with Lawley Insurance. Been here about 7 years and in the industry for 20 as a business insurance advisor. So happy to be here with you.
So I got some tough questions today for Jen, and also I stay up to date with the comments, and I've read some of the comments, some of the questions that you guys had, and I'm going to raise those questions to Jen, and we'll see where this video takes us today. So, and guys, if you have questions on insurance, you're also more than welcome to reach out to Jen. I will put her information in the description of the video. So if you have questions, they insure a lot more than just trucks. You guys they insure a lot of different things.
Yeah, any industry we can work with, and it's not just captive insurance, it's any type of business insurance, as well as personal insurance, some employee benefits, 401k plans. We also have an awesome risk management team and a claims team as well. And bonds. Can't forget bonds. So I like to say there's nothing that we can't help our clients with.
Perfect. And so like was mentioned in the other insurance video, we kind of ran into a problem where we had quite a few claims or quite a few things where, and basically our premium was sky high. And so we had to change. We're like, we got to do something different. And it was actually our accountants that put us in touch with you guys. And we set up the first call, and I was very intrigued by captive insurance, and it worked out good for us. So I think, was it March 31 or April 1 right in there is when we switched over?
Yeah, it was March 1st when you switched over, and we started the process I think in December.
Yeah.
So
we had a lot of Zoom calls and a lot of questions, and not only that is to be able to get the other partners on board with everything. It was challenging, but it was good. I'm glad we're here. So
me too. And I think I just want to add, you had the vision to see into the future and see long term and do what was right for your company for that long term vision, which was important. And
in the comments, there were some things like insurance is a scam, which it seems kind of like a scam. There was a couple different funny comments about that. And this video will help tell you how we are saving money on insurance, or we're actually, like, that premium that you pay in that you never see, we're actually able to get some of that back. And so that's what is pretty cool with captive insurance. Yeah. So maybe, do you want to explain a little bit how captive insurance, or what captive insurance is and how it works maybe?
Yeah, let's start with what it is. So a captive is a group that is owned by business owners, and each of those business owners actually have ownership in this insurance company that they've essentially formed. They have a share of stock that provides them with that ownership, and they have the ability to get some of the premium dollars that they pay in back if they perform well. And the great thing is, because they are the insurance company, there's no big, huge insurance company that's reaping the profits that they create from performing well and not having a lot of claims. Any underwriting profits go back to each business owner that created those profits. So that's essentially how it works in a very broad view. In captive insurance, you pay a premium that's very similar to, as you know, what you would have paid in the traditional world. So there's not really a savings from that perspective. But you pay in your premium. 40% of that premium goes to pay the expenses of this insurance company you're now a part of operating, essentially. So it's your operating expenses, it's the claims management expenses, any of the people that have to be hired to make this insurance company operate. 40% goes to them. And then you have this pot of 60%. that 60% of the premium dollars that you paid in is set aside to pay your claims. So if you perform well over time, you have a chance to get that 60% back. And that's what's different between a captive program and traditional insurance. You don't have the ability to get anything back with traditional insurance. If you perform well, you don't have claims, the insurance company says, yay, we're going to keep all that money.
And sometimes the premium still goes up.
Right, exactly. Depending on lots of different factors impacting that traditional insurance company that might have absolutely nothing to do with you. And that's part of the big frustration. And so with a captive program, your premium, this is another benefit, your premium each year is determined based on 5 years of historical claims data only for your company. Nobody else in this captive program. They're only going to look at your claims, and they're going to look at the exposures that you have, meaning the number of trucks, the amount of payroll, the amount of sales that you have. They're going to look at all of that data to come up with what your premium dollars need to be to cover your potential claims. So those are the only variables impacting your premium, which is another benefit. There's no arbitrary rate increases because the insurance company needs more profit, because they have other businesses that are performing poorly, because their investment income isn't as good as it was in past years. None of that is impacting you. It's solely based on your performance. I'll probably say that about 10 times in this conversation.
So, and we found that out, like, it's a big push. You want to be safe. Yeah. You want to make sure your trucks are going down the road safe. You want to make sure that employees don't get hurt. I mean, there's many things that, we took a different look at because it really affects what you get back.
Yeah.
So what is it that determines I'm ready for a captive group? Is it like once, and I'm talking maybe more in the trucking world, okay, but is it maybe once you're at 10 trucks, once you're at 30 trucks, or is it more so a dollar amount that you look at, what you're paying in premium?
I would say it's a dollar amount. Typically, the threshold is around $200,000 because you need enough premium dollars there for all the numbers to make sense. You have to pay that 40% in expenses. You have to have enough of a pot of money left over for claims. You get any smaller than that and the numbers really don't work because you could have a sizable claim that you didn't have enough in that pot necessarily. And I'm definitely simplifying things here, but just trying to get some basic understanding. So $200,000 in premium. So whatever combination of vehicles, that would be based on, I know different states are going to be different costs. And then we would say companies that have a good handle on their safety and have good training programs in place. They don't have to have everything perfected, but they have to have somewhat of an awareness and some foundation in that regard. So that you're working with our risk management team to elevate further, but you guys already had a really good handle on safety, making it part of your culture, which is really important.
Because you don't want to be in the captive group with other people that are unsafe or creating a huge liability.
Right, and the captive, that brings me to another good point. With the captive program, you have to be approved. It's not anybody can get into a captive. You have to be approved by the other captive members because, like you said, the other captive members don't want to be letting people into the group that don't have a good handle on their safety.
So backing up just a little bit about the premium. Mm-hmm. What insurance can be through the captive? Like, not every insurance can be.
Right. So there's 3 lines of coverage that go into the captive. The auto, of course, because that's the big piece here. Workers' compensation and general liability are the 3 pieces that go into the captive. Everything else, your property, your equipment, your umbrella coverage is going to be outside that captive program. But those are things that we can handle like we do for you. Mm-hmm. We can handle some of those other pieces that are outside the captive and then just have those 3 lines that go into the captive.
So what you're saying is if you're in New York State and you're paying more than $200,000 in premium for those 3 lines, mm-hmm, they really need to talk with Jen.
Talk with me. And not just New York State. We talked about there's a lot of people watching this that might not be in New York State, and you could qualify for a captive too. You don't have to be in New York State. It could be any state. New York just happens to be a difficult state when it comes to the insurance. So yeah, it's probably going to resonate with the New York folks more. But yeah, those are the factors that I would say. And then the other piece, like you saw that this was a long-term solution for your company and would create stability. You no longer have to worry about huge spikes and these ups and downs with your insurance premiums. So that was important to you.
Yes.
And so any business that is looking for that stability and the long-term solution.
And I'm going to just break that down into my words.
Thank you.
So what I was concerned about is in reality is one of our trucks going out and having a nuclear verdict or a $3 million claim or whatever, and basically what happens then is the insurance company 9 times out of 10 they're going to drop you, right? Mm-hmm. And now you're forced to have or go find insurance for yourself that you don't really have a good track record, and either you have to start another MC number or something to get past that. And that's where with in a captive group, it's not like that. And that's what she's saying is the stability is there. You're not going to have those big spikes, those big ups and downs. The other thing, what really stood out to me with captive is that, the dollar signs. At the end of the day, it's really hard in the trucking business to do things cheaper, right? Mm-hmm. But you have to find ways. So you have to find ways to save money. You got to try to save money on parts. You save money on tires, insurance. You try to save money. And I'm looking at, there's money that I pay out that it's dead right now, mm-hmm. Doing nothing with, and you can get a portion of that back. Right. So if you're paying in over $200,000, you can get well over $100,000 back if you're a safe company.
Right.
So it's a nice chunk of change.
It is. And those returns over time, obviously they're going to accumulate. You're not just going to have 1 year worth of returns coming back mm-hmm. to you. You're going to have several years of returns coming back to you. So it's multiple years. So essentially you're creating a revenue stream for your company through your insurance program.
So maybe this is on as far as for premiums, whether they're in a traditional insurance group or captive group, mm-hmm. What are some things that you could do to keep your premium down? And I know I touched on this with Steve a little bit, mm-hmm. but maybe what are some of your ideas in order to keep premiums down?
Well, I always encourage people to look at their entire insurance program and figure out where the bulk of that premium is coming from. So for your company, that yours is workers' compensation and the auto liability. Mm-hmm. Those are the two that are driving it. So how can we keep those numbers down? On the workers' comp side, we have obviously accidents or injured workers are going to directly impact your workers' comp costs. So we talk a lot about that, and that's what we work with our risk management team on is safety. The only other option on the workers' compensation is payroll, is lowering your payroll dollars, and that's really difficult, especially with the increase in wages, right? So that's tough. On the auto side, you can talk about safety and all that, but I am encouraging businesses to look at their fleet and really analyze, do you need all of those vehicles? How can you become more efficient in your operation so that instead of 50, you can do 45? It makes a difference, but that's truly the most impactful way. Sometimes people can make their routes more efficient. That's not my world, that's your world, but it's one of those things where the number of units is obviously driving your cost, and there's not a lot to play with. There's not a lot of deductibles to play with. You can look at your comp and collision and choose to self-insure that. A lot of businesses are doing that, and there's ways to do it even if you have loans on your vehicles. There's ways to structure that with the banks so that you're still satisfying their requirements. So that could be something to look at, is self-insuring comp and collision.
Yeah. And I think too is just looking at deductibles. Sometimes that can make a difference. Probably not a huge difference.
It's not a huge difference because if you look at the breakdown in premium on the auto, the bulk of it is your liability premium. The smaller part is that comp and collision. So you have one claim and your savings is wiped out.
Yep.
So.
And one of the things that I stressed on the last one, and I'm going to stress it again, is you got to be proactive with insurance. You know, try to prevent the accidents because once they happen, it's too late. You know, once you have a book of claims, I mean, you think a little fender bender or rear-ending a car, it's going to be done and settled in 3 weeks, and those things can drag out for 6 months to a year to more. We've had it where, you know, they kept going to the chiropractor and this and neck injury and on, and your insurance company sets aside, you know, $80,000 or whatever it is for that, you know, just in case.
Right.
And it ties up, you know, it makes it look bad. So
it makes it look bad, and I should say that I bet a lot of people are familiar with the experience modification on the workers' comp and how that works. If not, you can let me know. But I want to let everybody know that it's very similar on the auto side where those claim dollars, whether it's a liability claim, a comp or collision claim, goes into an experience modification calculation. So if there's that $80,000 reserve sitting out there on that auto claim, it is directly impacting your premium calculation. So yes, it's very important to not have the claim so that it's not even there. The other part of the claim is it's not just the dollar amount that the insurance company sets aside or pays out. Think about all the time that it takes that your company has to deal with it, and there's those secondary costs.
The other thing is, I think guys need to pull their loss runs. Sometimes you don't realize what a claim turned into. You think, oh, you just give them your insurance and you turn it in, and you think, oh, it's going to be a $3,000 claim, but it turns into being this big headache.
Yeah.
And I think guys need to, and I should have been doing a better job of that, of pulling loss runs. And pull your loss run, go down through every single one. You should know what it is, and you can see the limits they have set aside. You can see the reserves, and you know it's pretty easy.
Yeah.
And you'll soon start to say, "Hey, I need to do a little better job."
Well, and that's where we have a good partnership because that's on our radar to reach out to you and say, "Hey, we have to do a claims meeting. Let's go through your claims and update you on those." But you're right. We want clients that are going to be part of that process because it is important. You have to understand what's going on with your claims and where those dollars are at.
You talked a little bit about maybe, you know, trying to make your fleet efficient, but are more trucks cheaper per truck?
I'm going to say, hold my feet to the fire, yes. Final answer, yes. Yeah. But there's lots of different reasons why. There's this thing in the insurance world called a fleet. You have to have 5 or more units to qualify for a fleet. When you have a fleet, there's more credits, there's more underwriting ways that they can get your premium to be lower. So yeah, it's economies of scale, meaning the more you have, the lower that cost could be per unit at the end of the day.
And this is maybe a question I should have asked Steve as well, but what should a premium be for an owner operator, or for, you know, like, let's say if you're under that 5 truck range, you know, where should your premium approximately be, if you can give us any kind of an idea?
Do not hold my feet to the fire on this one, anybody. I would say if it's 1 truck, 1 trailer, and again, we're going to go with New York on this one, I would say in the $5,000 range.
And it probably depends too on the value of the truck, the value of the trailer,
Absolutely.
Miles, where you're going. You know, there's so many things that play into that. So
and I'm meaning $1 million coverage limit, auto liability limit for that. Yeah, I mean, it's a ballpark. There's going to be lots of variables that impact that, and it does depend on the company. There's a company out there, insurance company, that's very expensive, and it wouldn't be $5,000 for 1 truck and trailer with that particular carrier.
10 years ago, what was the average policy size? Like, you know, now we're seeing, you know, 1 to 2 million, and then an umbrella of like 3 to 4 to 5 million. 10 years ago, or even 15 years ago, what was more the average size of premium? of coverage.
I can't believe I was in this industry 15 years ago. So 10 years ago, I would say we were still seeing some people that were coming in with $500,000 on their auto limit. I would absolutely back then change that to $1 million. Just there's not a huge premium difference. So it was about $1 million. Not everybody had umbrellas back then by any means. And if they did have an umbrella, you would see about $1 million umbrella. Nowadays, as you know, nobody's writing $500,000 limits. You're getting a $1 million limit. Some people are getting $2 million because there's that cost savings where it's cheaper to increase their auto policy to $2 million rather than getting that $1 million umbrella. But we're also seeing those umbrellas, go up to $5 to $10 million because of those nuclear verdicts.
And it's tough because if you get sued, God forbid, but if you get sued and your insurance coverage is up to whether it's $2 million or whether it's $5 million, they're going to take it all. They're probably not going to put you out of business because they don't like to do that, but it's probably going to put you out of business because you won't get insurance anymore. Yeah. In turn, all it does is just make insurance go higher, and it might not make it. If you decide I'm going to sell the business and get out of it, it's just going to make it higher for everybody else. That does get spread out, and insurance companies, I feel they do look at, hey, here's a $7 million verdict. Everything is going up, and insurance, cars, trucks, everything's more expensive.
Yeah.
And what I find insane right now is that you can buy coverage on a vehicle in New York for the other person, and I think you can get it as low as $10,000. Am I correct?
As far as the minimum amount of?
Yes, the minimum liability for somebody else.
For somebody else.
If you ran into somebody else and wrecked their vehicle.
Yes. I'm not even sure if it's $10,000. It might be $25,000 now. But yes, it's very low. It's very low. Yeah.
Because we had an incident where about a year ago, and the guy had only $10,000 of insurance, did $18,000 worth of damage, so we had to cover that other.
Right. Yes. That is very frustrating when that happens.
And when they hit you and your vehicle is worth, 50, 60, 70, I mean, you can get a pickup now $80,000, $90,000.
Yeah.
And who eats that?
Right.
And you turn that into your insurance, it's a thing against you.
Yes. So you're talking about the property damage coverage, which is under your liability section. The minimum, I think you're right, it is $10,000 for that. And like you said, vehicle, I think every vehicle, a newer vehicle, is over $10,000 nowadays. So the other person who got hit and it wasn't their fault is picking up that additional cost.
Yeah. And you either have to go and sue that person or somebody to get that money back, or you just eat it.
Yeah. And most likely if they're carrying such a low limit, you go to sue them, there's really nothing to collect from. But to go back to your point about the umbrella limits, and if you have $2 million, they're going to take $2 million. If you have $5 million, they're going to take $5 million. I always say to my clients, there's a couple, because they ask, how do you choose the umbrella limit? A couple things. Number one, what are you required to have based on people that you're doing work for or hauling for? So that's number one. Number two is, what makes you sleep at night as a business owner? Are you more comfortable having $2 million, or do you in your mind say, you know what, I can't sleep with $2 million. I need to have at least $5 million. That's what makes me comfortable. That's what you have to go with. You have to go with what makes you comfortable. If you're the business owner that says, I'm not getting $5 million because they're just going to take $5 million. I'm just going to stick with $2 million, and that makes me happy, and I'm good with that, then go with that.
Yeah. The umbrella coverages, whether you went with a $2 million umbrella or $5 million, is probably not going to vary that much.
As far as cost goes?
Or
I would say it depends on the size of your fleet.
Okay.
Because if you have a 50-unit fleet, that umbrella pricing could be significant. Also depends on carrier.
Yeah. Thank you, guys. If you have questions, please let me know in the comments. Again, I'll have Jen's contact information in there. Reach out, and we'll be more than glad to help you out, answer questions. Thanks a lot, guys, for watching. We'll see you in the next one. Peace out.